And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Tuesday, September 14th, 2021. Today's update may be a little bit longer, but please, I do suggest that you try to listen through this update because I have made major changes. And as I alluded to over the last couple of days that I've made updates, that we may go back, or I may go back and put that high, which right now is labeled at 4549.50 as the completion point for all of our advancing sequences. So I'm putting those fives in place now. So that's a minute five, a minor five, intermediate five, a primary five, and a cycle five above it. And on top of all that, it is completing a super cycle wave 3. That's an extremely long term. So I'm only going to deal right now with up to that cycle level and realize that even though we're having a super cycle degree wave 4 correction, the first level down would be we need to have a cycle degree move. And then within that, we're going to have all the varying degrees. So the reason that I've done this, and people may tell me that I'm early, and that's okay because I am human. And if this market were to reverse immediately and start rallying back up to highs, I'd be the first to come back and say, whoops, went too fast, etc. But right now, I don't believe that's going to be the case. Let me just walk through this together. What I now am labeling what was, ABC in the 4 was right here. Once the market came down and broke that level today, it changed everything. So here again, wave 1, wave 2, the rally rejected. Then we got 1 and 2, the rally rejected twice. Then we got another rally, which we labeled as a subminute wave 4, rejected, took it all the way down to the low that we had yesterday at 4434.50. Then we had a decent rally, but look what happened. It ended up being 3 waves. And if you remember, I believe yesterday I talked about that if it did leave a 3 wave and came down and started to break below, first was 71, but I think I had it a little bit lower at 60. Then again, if it broke to new lows, it's going to negate this whole level, this whole move, and suggest that it is indeed producing a larger 5 waves down to mark the initial 5 waves down for a much larger correction. And that's exactly what happened today. The market came down at 5, and it may not even be done, but it came down to 4425.25. And now it's rallying a little bit off of that level, as I would anticipate, but I suspect that it's not over. That this initial decline is not over. And so I'm going to leave the count as is, but this might be wave 1 of 5. And then we get a rally up, and then we get another decline as wave 3 of 5, and then wave 5 of 5. So this could bring us all the way down to below 43.47 or 43.48, which is the low of minor wave 4. So that would be the first target that this corrective leg should find support, which it already is inside that price territory, but quite often that it will drift all the way down to the terminus or the end point for that previous 4th wave. And that's going to suggest that what we're getting is an intermediate wave 1, because the correction is going down to the previous 4, and it's coming in 5 waves. So that would make it, of 1 level higher. So we're likely starting to drift lower and starting to get ready to put in a 5-wave structure, but it's going to be on a much higher level. I will mark it at first as a minor wave one, because I'm counting these as minute. So I would label it as a minor one, and we'll see how it goes from there. Again, labeling can change. The message remains the same. The message right now is that this is very likely done. Now, so what I want to do is open up this chart in terms of time frame, and I'm going to go out to my daily chart. And what I'm going to need to do is, if I'm expecting now an intermediate degree correction, I'm going to first go, I probably need to go further, but I'm just going to take it from this intermediate 4 to the top of intermediate 5 and see what that looks like. Oops, first I got to set this right. Put it on there. These are all just going to be very initial levels. And now I'll take it back down to my hourly chart. And you can see we have support at 44.22, and then 43.84, and then 43.46. And that's going to match up with that low. So I believe we're going to come down to that 43.46 before all is said and done. And that's less than 100 points from where we are. And what they're thinking, what's going to happen in the rest of the week, that becomes a reality versus not possible. And again, for the market to start to turn around from these levels, this did not come out right. Let me just edit that. It's going to change that number. The end point is 49.50. So let's do that. Yeah, changes a little bit. We have 44.25, then 43.87, then 43.48, which again still goes to the terminus or the endpoint for that minor 4th wave. And that may just complete that first wave down, the first 5 waves to complete first wave down. So upside from here, we're still likely going to see stronger rallies because the market continues to find reasons to step in and buy individual components. So right now, 1, 2, 3, this is a 4, and the 4 could rally back up to 44.45, et cetera, but I think ultimately we're not going to be moving up to new highs. We're going to start to just do 3 waves up and 5 waves down. That seems to be the pattern. If we look all the way coming down, this was 3 waves, this was 3 waves, this was 3 waves, this was 3 waves. So we're getting 3 waves followed by 5s. And that's what I think is, that also begins to tell us that there's been a shift in, number 1, the trend, and number 2, the direction that the market now will take over at least the short term here to the midterm to eventually the long term. Now, the whole pattern is going to contain very strong rallies in the terms of larger bounces, larger, B waves, or if this comes down and I label it wave 1, wave 2 should be fairly decent, and wave 2 could take back 50 to 62% of the decline, depending on where wave 1 completes. So that's going to be a very tradable rally from the long side. So we need to keep focused on that. Nothing is going to go straight down, nor is it going to go straight up. But we're going to have very tradable declines and very tradable rallies, bounces. And if we're able to track them, it's going to keep tabs on how we're going to trade and what we should trade. Because again, we're still going to use our moving averages. We're still going to be counting on our short-term charts to keep us in line with what we should be expecting. Again, I can go to the 5-minute chart. Let's just try to open it up a little bit. Let's open it up so you can see that beautiful 4. Open it up even more. Now we got to see we've got, everything is lined up. There we've got the 200, there's the 50, there's the 20, and the 4 and the 8. So if they turn from here, because they're being held, you can see, that's the 5-minute chart. They're being held by the 5-minute 50. If it goes above the 5-minute 50, expect a little bit of a push. It's breaking a level, and there likely will be follow through. And then, but I would assume A, we get a little B, we get a C, or this, excuse me, that is A, that's B, and this is a C. I would not expect a whole lot more before the market turned and started to come down again. Then those are going to break, that's going to turn lower. And then those are your signals of where you're going to start to play it from the short side. And again, I'm going to say that you know, the way that we trade in the trade room, the way that I trade is keeping a very strict focus on what the price action is. And the price action is going to guide you through everything. The price action is going to tell you. And then using the candles, using the moving averages to help guide where these things and how far they should go. Because we, again, as I always say, we have to allow the market to tell us. So that's why I trade what's in front of me. That's what the market is telling me. The market's telling me it's going to go up for a little bit, fine. I want to play from the long side. If the market is telling me that it's going to slide, it's going to start to travel lower, fine. I want to be short. But I allow the market to tell me. And then I can put parameters around that in terms of a stop, in terms of a target for taking a trade off. Now, for tomorrow, I do think the decline is going to continue. Unless they can build on this and it goes up high enough, and then it gets a little bit of a decline, does not break below 44.36, because if I have to say this would be wave 1, that's going to be wave 2, and then if this is the 3, when that 4 comes, it can't go below 44.36. That would break the rule. So if that happens from anywhere up here, say it gets up to 440 and then declines and breaks down below 36, it's not a 1, 2, 3. It's an ABC, boom. Then your targets are going to start to come in down here. If we're going to start to look for new lows, but I'm also going to be able to count the waves. I'm going to be able to target things so that if you're a day trader, you'll be able to trade the first one, not worry about it or hold for any of those individual rallies, but you're going to be able to adjust stops. You're going to be able to put things together. And that's what we do in the trade room. So if you have an interest in trading these declines and this now new move, you might want to consider checking out the promos to come and join us in the trade room. But for tomorrow, we might get a little bit higher, and then I'd be looking for the market to drop again. Once it starts to break below that, then I'm going to be drawing that I'm looking for it to go down eventually and produce new lows below 44.25. That's what I'm going to leave it for right now. Next update will be on Wednesday, the 15th.